Hey guys, welcome to Learning Accounting. I'm Jim Abdulkabir, the founder of Learning Accounting, and this particular channel is expected to treat all related accounting issues, especially for professional accountants. So we'll be looking at courses like financial reporting, corporate reporting, or strategic business reporting for all type of exams, be it the ACCA exams or the ICANN exams or other related tertiary education exams like the masters, the postgraduate or the undergraduate issues, all those exams, we'll be looking into them. Now I would like you to watch the video and drop any questions in the comment section, and I'll be here to answer your question for you. So stay tuned and watch the video to the end. Hey, welcome back to Learning Accounting, and today we'll be looking at the part 2 of application of right of use assets in respect to the lessee book under IFRS 16. In the last video, we discussed on treating the lease under the arrears, which was this, under the arrears, but like I promised, I'm going to be also treating it in advance. So we'll see the difference between arrears and advance. And like I said, the first thing we'll be doing is to calculate the present value of the future lease payment. Now, to calculate the present value of the future lease payment, I said the first thing we have is years 1, 2, and 3. 4 in this case, since the lease period is for 4 years. But when it was in arrears, I said year 1 was year 1. But now that we have it to be in advance, of course, year 1 will be year 0 because we are paying it immediately. And year 2 will be 1, 2, and 3. So time value of money again is the reason for using these numbers as we have them. Now the next thing is the cash flow. And the cash flow in this question, of course, is the installment which we are paying, and we can see there is 3,000. So we have 3,000 in year 1, we have 3,000 in year 2, we have 3,000 in year 3, and we have 3,000 in year 4. Discount factor at 10%, we have 0. We have 1.0 since it's at 0. So 1.0, we have 0.91, we have 0.83, and we have 0.75. Our PV, of course, we have to calculate the PVs. 3,000, we actually remain 3,000. Then we have 3,000 multiplied by 0.91, and that gives us 2,730. 2,730. We have 3,000 multiplied by 0.83, and we have 2,490, 2,490, and the last one we have is 0.75 multiplied by 3,000, and we have 2,215. Okay, so we've been able to calculate the PV for each of the period, and we get the summation to get the PV of the future lease payment. And let's sum that up. 2,250 plus 2,490 plus 2,730 plus 3,000, and that gives us 10,470. So when we actually calculated it in arrears, the PV was actually lower compared to now that we are calculating it in advance. Now, like I said, the PV, in this case, we don't have other issues. We just have the PV of the future lease payment. So in this case, we are going to assume that is the value of the lease assets. So for the asset side again, the lease assets have a value of 10,470, which is expected to be depreciated over its estimated useful life. 10,470 divided by 4 over the lease period rather. So 10,470 divided by 4 This was 2,617.5. 2,617.5. Of course, the depreciation figure is also high, giving us the carrying value at each year end. So we have 10,470 minus 2,617.5, and that gives us 7852.5. 7852.5. So again, this is for year 1, year 2, 3, and 4. So we have 7852.5, and we have 2617.5, and that will give us minus 2615.17, sorry, 0.5, and that gives us 5235. 5235. Here we have 5235, and we have 2617.5, and this give us 2617.5, and we have 2617.5 and 2617.5, and the asset cease to exist at the end of year 4. Okay, so that's the asset side. It's not really difficult, like I've said, just application of IAS 16 there. On the liability side, which is actually the area we'll be more interested in, on the liability side, the lease liability, of course, is 10,470. Again, this is more like the credit entry with the initial recognition. We have no initial deposit. If we had, we would have deducted it, which gives us the remaining obligation, or you can say remaining liability, which still remains 10,470. Okay, at this point, installment will come first, or you could call it rentals, which is 3,000, and this will give us 7,470. Then interest will come next, and we have 7,470 multiplied by 10%. Now the advantage of advance is that your interest is definitely going to be lower compared to arrears, because arrears interest accumulate before you deduct any installment payment. So this is 747, and this will give us the lease liability at 31st, at the end of year 1. Let me not use date because I didn't mention date at the beginning. So at the end of year 1, we have this. Let's sum it up. 7470 plus 747, and that gives us 8217. 8217. Now in this case, your total lease obligation is this figure here, but your installment for the subsequent period, which is for year 2 now, or rentals, is actually your short-term lease obligation, and that figure is 3,000. And whatever balance you get at that point in time is your long-term lease obligation, and that figure is 5,217, because that would be the figure there. Then we would have to calculate interest again, since we're already accounting for year 2, and we have 5,217 multiplied by 10%, and that gives you 522 approximately, and this will give us again lease liability at the end of year 2, and Sum that up. We have 5217 plus 522 plus 5739. 5739. Okay, so again, the same thing is applicable. The installments for rentals for year 3, which is still 3000, is this is still your total lease obligation, and this becomes your short-term lease obligation. And after deducting this, we have 2739, which is again our long-term lease obligation, and we'd have to calculate interest again, which is 2739 multiplied by 10% again, and that will give you 274 approximately again. And of course, because of approximation errors, we sum this up. 2739 plus 274. Of course, we have 3013. Like I said, approximation issues. What we are supposed to have exactly should be 3000 at that date, which is supposed to be the lease liability at the end of year 3. Meaning, at this time, if we want to calculate for year 4, we are going to have installment again for rentals, and the installment of rentals is 3000. So at year 4 there will be no interest, because this becomes 0 at year 4, and your interest, if we were to calculate interest, would have been 10% of 0, which is still 0. Therefore, our lease liability at the end of year 4 will also be 0 at that particular date. So again, just like we did in the previous session, we can show the extract of what goes to the profit or loss in terms of the extract. And we're going to have here 1, 2, 3, and 4. Depreciation. We have 2617.5, 2617.5, 2617.5, 2617.5, and 2617.5. Then we also have finance costs in respect of the lease, and the finance cost for the first year we have it to be 747. The second year we have it to be 522. The third year 274, and nil in the fourth year because you don't have to pay interest. In the statement of financial position, extract, year 1, 2, 3, and 4, we have the assets, the non-current assets, the lease assets. And the lease assets, let's speaking down the figures we have here, 7852.5, 7852.5, 5235, 5235, 2617.5, 2617.5, and of course the asset seeks to exist at the end of that day. For the liability, we have non-current liability, lease liability, and we have current liability as well, lease liability. Okay, so like I mentioned earlier, we have 5217 and 3000. 5217 and we have 3000. For the second year, we have 2739 and 3000, 2739, 2739 and 3000. Of course, in this period we have nil and 3000, and the lease assets is to exist in our books at year 4. Now, in the case of the advance, the installment actually is what we represent in the current liability section, because of the first amount you're going to always pay at the beginning of every accounting year. Since advance means you're paying at the beginning of the year, let's not forget that. Arrears means you're paying at the end of the year, and time value of money will not affect this 3000 because it is at the beginning of the year. But when you're paying at the end of the year, time value of money will definitely affect the value of what you would be paying, and that's why it's more like it has been discounted, but you're paying the full value at the end of the year. Okay, so this is what we have here in respect to advance when it comes to right of use assets. So this is basically the process to calculating this type of information if you're given in an exam scenario. Even in a real life scenario, this is what you should always pay attention to. So I hope this would help you to better understand IFRS 16 right of use assets, how to actually compute it. Now that you're done watching the video, I'm sure it was insightful and it was educational. Make sure you subscribe on our YouTube channel and like our videos, and also share these videos with other friends who might likely have the same exam as you. And I'm sure we'll be seeing again in another session. This is Learning Accounting.